Hello, and welcome to this comprehensive video on how to invest in real estate. Real estate investing can be a great way to build wealth and achieve financial freedom. However, it's essential to have a good understanding of the real estate market and the different investment strategies available. In this video, we'll be sharing everything you need to know about investing in real estate, from setting investment goals to finding the right property and managing your investment. 1. Understanding real estate investing. In this part of the video, we'll provide an overview of real estate investing and its potential benefits. Real estate investing involves buying, owning, and managing properties for the purpose of generating income and building wealth. There are several types of real estate investments, including residential, commercial, and industrial properties. One of the main benefits of real estate investing is the potential for long-term capital appreciation. Over time, the value of real estate tends to increase, providing investors with a valuable asset that can generate significant returns. Additionally, real estate can provide investors with steady income in the form of rental payments. However, real estate investing also has its potential risks. The value of real estate can fluctuate based on market conditions, and properties can be subject to unforeseen issues, such as maintenance problems or tenant turnover. It's essential for investors to have a good understanding of the real estate market and the different investment strategies available to minimize these risks and maximize returns. 2. Defining your investment goals. Before investing in real estate, it's essential to define your investment goals. Your investment goals should be aligned with your overall investment strategy and take into account factors such as cash flow, appreciation, and risk tolerance. When setting investment goals, it's important to consider the different types of real estate investments available and choose the one that best aligns with your goals. For example, if your primary goal is to generate steady income, you may want to consider investing in rental properties. If your goal is to generate long-term capital appreciation, you may want to consider investing in commercial properties. 3. Researching the real estate market. Researching the real estate market is essential when investing in real estate. A good understanding of the local real estate market can help investors identify potential investment opportunities and make informed decisions. One of the first steps in researching the real estate market is to understand market trends. Investors should pay attention to factors such as housing supply and demand, interest rates, and local economic conditions. Additionally, investors should analyze historical trends and projections for the local real estate market. Another important aspect of researching the real estate market is evaluating property values. Investors should consider factors such as location, condition, and potential rental income when evaluating property values. Additionally, investors should be aware of market trends and potential changes that could impact property values. 4. Choosing the right investment strategy. There are several different real estate investment strategies available, each with its pros and cons. It's important to choose the right investment strategy based on your investment goals, risk tolerance, and market conditions. One common real estate investment strategy is buy and hold. This strategy involves purchasing a property and holding onto it for an extended period, typically with the goal of generating long-term capital appreciation. Another strategy is fix and flip, which involves purchasing a property, making improvements, and then selling it for a profit. Finally, rental properties involve purchasing a property and renting it out to tenants, generating steady income in the form of rental payments. When choosing an investment strategy, it's important to consider the potential risks and rewards. Each strategy has its potential benefits and drawbacks, and investors should choose the strategy that best aligns with their investment goals, risk tolerance, and market conditions. Buy and hold is generally considered a low-risk strategy, as it provides a steady income stream and long-term appreciation potential. Fix and flip, on the other hand, is considered a higher-risk strategy as it requires investors to make significant renovations and sell the property quickly to generate a profit. When considering rental properties, investors should evaluate the potential rental income and expenses associated with owning and managing the property. Rental properties can provide steady income in the form of rental payments, but investors must also account for expenses, such as property maintenance and management fees. 5. Financing your investment. Financing is a critical aspect of real estate investing. Investors must consider their financing options and choose the one that best aligns with their investment goals and financial situation. One of the most common ways to finance a real estate investment is through a mortgage loan. Investors can obtain mortgage loans from banks or other financial institutions, typically with a down payment of 20% or more. It's important to consider the terms of the loan, including the interest rate, repayment period, and potential fees. Another financing option is using cash to purchase a property outright. This option can provide investors with greater flexibility and control over their investment, but it may not be feasible for all investors. 6. Finding the right property. Finding the right property is a critical aspect of real estate investing. Investors should consider several factors when choosing a property, including location, property condition, and potential rental income. Location is one of the most important factors to consider when choosing a property. Investors should consider factors such as proximity to amenities, transportation, and schools. Additionally, investors should evaluate market trends and projections to identify areas with potential for long-term appreciation. Another important factor to consider is the condition of the property. Investors should evaluate the property's condition and identify any necessary repairs or renovations. Additionally, investors should consider potential maintenance costs and factor them into their investment analysis. Finally, investors should evaluate the potential rental income associated with the property. Rental income can provide steady cash flow and help offset expenses associated with owning and managing the property. Investors should consider factors such as local rental rates and demand when evaluating potential rental income. 7. Managing your investment. Managing a real estate investment is an ongoing process that requires active involvement and attention to detail. Investors must consider several factors when managing their investment, including property maintenance, tenant management, and financial reporting. One of the most critical aspects of managing a real estate investment is property maintenance. Investors must ensure that the property is properly maintained to protect its value and prevent potential issues. Additionally, investors must consider potential maintenance costs when evaluating the potential return on their investment. Tenant management is another critical aspect of managing a real estate investment. Investors must ensure that tenants are screened properly and that any issues or concerns are addressed promptly. Additionally, investors must manage rent payments and ensure that tenants are abiding by the terms of the lease. Finally, investors must stay on top of financial reporting and analysis to ensure that their investment is performing as expected. This involves tracking income and expenses, evaluating market trends, and adjusting their investment strategy as needed. At the end, real estate investing can be a great way to build wealth and achieve financial freedom. However, it's essential to have a good understanding of the real estate market and the different investment strategies available. In this video, we shared everything you need to know about investing in real estate, from setting investment goals to finding the right property and managing your investment. Remember, real estate investing involves risks, and it's essential to do your due diligence and make informed decisions. By following the tips and strategies outlined in this video, you'll be better equipped to navigate the real estate market and make sound investment decisions. Always remember to set realistic investment goals and consider your risk tolerance when choosing an investment strategy. Additionally, be sure to evaluate financing options and choose the one that best aligns with your financial situation and investment goals. When choosing a property, consider factors such as location, property condition, and potential rental income. It's also essential to stay on top of property maintenance, tenant management, and financial reporting to ensure that your investment is performing as expected. Finally, it's important to stay up to date on market trends and projections and adjust your investment strategy as needed. With patience, persistence, and a sound investment strategy, real estate investing can be a powerful tool for building wealth and achieving financial freedom.